Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. More record highs were set in New York. Lumber insanity continues while the cryptos took a big hit. Ross also looks at gold and the US dollar. Author of the second edition of When the Bubble Burst Surviving the Canadian Real Estate Crash, Hilliard MacBeth, chats about Canada's federal budget and its massive deficit. Was there anything in it to make housing affordable or to help struggling businesses? Publisher of the Campbell Real Estate Timing Letter, Robert Campbell, reports in from San Diego. He talks about the U.S. real estate market and dispels some recent myths. He also has some health tips. Plus, at the end of the show, we'll have a company showcase update with American Manganese CEO Larry Reaugh. We'll talk to Ross Clark right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at Charts by Ross. Welcome back to the show, Ross.
Always good to be with you, Jim.
Ross, this is almost an insane thing that we have to say every week. New highs on the major markets.
New highs, yes. But, you get these little hiccups in the middle of the week. And, when we look at it, we had a really good breakout here a month and a half ago in terms of the Dow, the S&P, and then the Russell gave up ground while the NASDAQ came back to life. But that really good run started to become fairly vertical into the end of maybe a week and a half ago. And we saw a bit of a shakeout early in the week, and then another one in the middle of the week when there was talk about changing some of the capital gains tax rules in the States and taxing some individuals with higher income and big capital gains, and then maybe something might happen over with currencies and Bitcoin. So there was a little shock put into the marketplace. But this, we take a look at the modeling that we've got on the equity markets in the post-election years. And this, when we've got positive years such as this, and this is probably the sixth one in the model that we're looking at going back to the 1970s that's been as strong as this. And we're at a point here where you can get 5 to 7 day consolidation corrections just like we've seen here in this last week or so. But you have to hold the supports that you generate during that process. And you can continue to stair-step higher. And 1997 is a great example. It continued right through until July. But in other years, once you start stair-stepping up at this high level now, it's important that, first of all, you don't break your support, which would make sense. But the other thing is that once you've done this consolidation, if you break out into a new high close, and in this case that would be maybe the 4185 level on the S&P, once you've done that, you can't come back inside, because that then becomes what we call an upthrust failure. It's the push through the top, no momentum, and if you start to do that, then you can see a pretty good correction. So for traders right now, we've been recommending that they raise their stops, and at this point it's to the lows that we had early in the week. If we push through to new highs in this next week or so, then they can bring their stocks up really, really tight, and see if this seasonal push in this post-election years does have more to go into the summer, which I truly believe we are going to have, whether it's from a mild correction or whether it's from a deeper one, maybe of the 5 to 7% variety. So we've got these parameters set, and we put them out in our research report, So the subscribers have got the opportunity to monitor this thing as it walks its way higher.
The cryptos took a hit this week. Is it because of rumors that they're going to put special taxes on them?
Well, yes, and if you look at this, we had that great move through to 65,000 a week and a half ago, and just walking up very steadily. And from our perspective, really it needed to start gaining some momentum and keep going. And the fact that it's rolling over and is looking more like a broadening top here that could have a fairly deep correction, probably back under 40,000. And if the catalyst is going to be something in the way of potential tax changes, yeah, you can see those that have been in it for, well, let's say anything more than 6 months. They might want to be taking their money out quickly before any potential tax legislation comes down the pike. So, a lot of people, it's better safe to be sorry, better to be out early than too late. So it's been a nice run. We got really aggressive back in October before it broke out, and it's been a decent run, but I think it's time to just sit back for a while.
Anything going on with gold?
Yeah, we've been looking at that nice double bottom. We had a projected rally into the 1783 level, and it got up just shy of 1800 and before reversing back down. We're at 1776 as of the end of the week. Silver got up just over our short-term resistance, just shy of the intermediate. And the most natural thing right now is that silver would give back about half of the gains from that $24 level. So we're looking at something maybe in the low 25s as a reasonable pullback for silver. And at that point, it really becomes important to us. The modeling that we've got in the post-bubble era since August has been really working out very, very nicely. We've caught just so many turns here. But once we see this next correction, hopefully give back 50% of the run off the $24 low, then it becomes really important as to how well that holds, because the modeling can go one of two ways. And anytime that we've got correlation models that we work with, they never go to infinitum. There's always going to be changes. The early part of the moves are generally, the most speculative in terms of the unwinding of the positions. So they tend to be fairly erratic, but also fairly easy to recognize. And as we've now moved further along, and this is the better part of maybe eight or 9 months since the top, we can start to look for some very independent price action. So for now, 50% correction, and then we'll be looking to see what the next leg is. But it's going to take time to develop, and I think maybe the better part of a month and a half, 2 months before we can be looking for the next significant move in the gold and silver markets.
How long is this lumber insanity going to last?
I don't know. Limit up again at the end of this week. It's not as though, you can grow a tree tomorrow and then go cut it down. The housing market has just been on fire, although, I understand that the sales are starting to drop off. But the demand for product is such that you just got to let these things run. I have no idea. I mean, here we are, $1,370 a board foot for lumber. I can understand why the open interest has dropped dramatically, because there aren't many people who want to be participating in a move like that one.
Well, I saw a joke that said U.S. Customs stopped a shipment of $1.7 million of lumber hidden in a shipment of cocaine.
I like that one.
Anything going on the currency front?
This is interesting. The U.S. dollar, for all that gold started to come off in the second half of this week, it's been also doing it with a weak U.S. dollar. And so, surprisingly so, we've had not been looking for the dollar to drop off quite this much. We're trading at the index is at 90.83. There should have been some reasonable support, I think, starting about 91.5, 91.25. Getting oversold enough right now that I think you could get a bit of a bounce out of there. And then the reflection over to the Canadian dollar is that it's just stuck here at this 80-cent level, plus or minus maybe 0.75 cents, and been buoyed up by the agricultural side of the equation, where you've got corn, wheat, and soybeans doing exceptionally well. Although the crude oil price, which has a fairly big influence, has been reasonably quiet. Now, in crude oil, we've just now passed the 1-year anniversary from when we had the negative pricing. And, the normal action on these big bull market moves that have fairly uninterrupted pricing within the move, there's 8 of these when we go back over the last 25, 30 years, and at about that 10 to 12 month anniversary point, it's very common to see the consolidation and to see it pull back to moving average support. So pricing today for oil is around $62, just a shade over. We see really good support down around just under 58. And if it could correct lower into there over the span of the next week or 10 days, then I think you can take a pretty good look at being long oil and picking up some of the oil stocks.
Ross, thank you so much for chatting with us.
Pleasure to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at Charts by Ross. Coming up, Hilliard MacBeth, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodGroup.com. Welcome back to This Week in Money, Hilliard.
Nice to be back.
Hilliard, how's the second edition of your book doing?
Well, I just got the income tax done, and I found the slip that shows the royalties, and they actually went up last year versus the year before, but we're talking about quite small amounts of money because, as you probably know, the authors don't get paid a whole lot for the by the time you print the book and put it in the bookstore and everything, it's about 10% of the face value of the book, so it doesn't add up to a whole lot of money, but it's still selling, and it's so the first edition, the second edition have been out for 5 years plus now, so it's pretty decent for a Canadian book to still be alive after 5 years.
Yeah, in Canada, book royalties, you're not going to become like the TV or movie book writers where they live in mansions and throw lavish parties. In Canada, you might get a case of beer and order in a pizza to celebrate your book sales. Where can people get your book, by the way?
Anywhere online or in bookstores if they're open, and on Amazon and the Canadian version, Kobo and all that's got it. I haven't done I had a question about an Audible edition, but I haven't gotten around to that yet. So so far it's just in print.
For the first time in 2 years, Canada had a federal budget this week. What were the highlights?
Well, the thing is over 720 pages long, so it's there's a lot in there. And the biggest thing, of course, was, and people will know this probably, Canada had spent more money than any other major nation in the world to recover from the pandemic recession. And so the deficit was around $340 billion for the year that ended. They used the March 31st year end. And they're forecasting a big recovery after that. They're forecasting it will improve to a deficit of only $154 billion in the year that just started April 1st. So it's a big improvement. And the biggest change there, they're expecting some increase in revenues because, of course, taxes went down last year because of the recession. But the biggest change to get that $200 billion improvement is the withdrawal of the special support that they provided during the recession. So we'll see if they get away with withdrawing it, because it is a deduction, and this is something you won't hear anywhere else. It is a deduction in GDP, and that's quite a large amount. $200 billion is a huge amount of GDP. The GDP in Canada is about $2 trillion, so $200 billion is a substantial 10%. And so we'll see, because up until now, the recovery has been quite sharp. The loss, we're still below where we were when the recession started, but we've recovered most of what we lost, a very deep recession and then a very rapid recovery. So if they withdraw that much out of the federal government balance in a short period of time, in 1 year, it's going to be a headwind for the economy for sure.
Were there any hidden items in the budget that they kind of sneaked by us?
Well, I don't know about that. I haven't got through the 725 pages yet, but I was a little surprised I didn't have more in there about climate change. So climate change, they did a bunch of initiatives in the fall, just a few months ago. Big paper on hydrogen and a few other things. And as far as I could see, they didn't do a whole lot in the budget to big incentives or anything. Unfortunately, they put a 20% tax on cars over $100,000, so that will diminish people's enthusiasm to buy the most expensive Teslas or Lamborghinis or Ferraris. But I didn't really notice a lot of really big changes. There was rumors there was going to be change in the capital gains tax. That didn't happen. So there is a lot in there. There's definitely a lot, and I think they've tried to sort of be everything to everybody. But to me, the biggest item is that reduction in the deficit from $354 billion down to $154 billion. So it's a $200 billion swing, which is, we've never had, like, the biggest numbers before the COVID recession were like $30 billion or something like that. So this is 10 times bigger than the biggest numbers we had. And another thing I was just looking at it, they don't expect us to get back to any kind of balance for a number of years. Like even 4 or 5 years out, they're still forecasting a $30 billion deficit. So it's a pretty immense situation that we're in, and it's going to continue for a while.
One of the Toronto newspapers had a headline that said, "There's nothing in this federal budget for you. However, it is designed to devastate the NDP and embarrass the Conservatives." Was that a good way to sum up the budget?
Yeah, I don't know about that. I watched the question period, and the Conservatives haven't been criticizing the budget. I guess they don't want to criticize it for some reason. And every answer that the Prime Minister gave was, well, the Conservatives must love the budget because they're not criticizing it. So.
If you were the finance minister, what would your budget have looked like? And would you have bought new shoes to present it?
Yeah, that new shoes thing, I just find that anyway. I don't know. I haven't really thought about it that much. I do know that that the biggest issue is so just to back up a step, the economy, the GDP, the way they measure the economy, which of course is a flawed way of measuring it, but this is the one they use, is consumer spending plus government spending plus investment spending by businesses. And then there's an export-import thing, but if you just ignore that, you've got three main pillars: consumers, business, and government. And what happened last year was the government became very, very large in order to make up for the fact that consumers were going to decline and businesses would decline also. So the big question is, how do you slow down the government spending and hope that the consumer and the business spending comes back, because that's how everybody's spending is somebody's income. So the three have to add up, and that's the big challenge. So that would occupy my thinking if I was trying to do this. And of course, they've got lots of people. So the percentage of the economy that was government, the federal government, was 30% before the recession hit, and now it's 50% or 51%. So the federal government grew by almost double, and of course you've got the provinces. When you add them all up, they're quite a big percentage of the GDP as well. So it's quite a challenge, and I think we'll see what how they handle the issue going forward, because withdrawing has got some real tricky, dangerous implications as well. I should say the federal debt is 50% of GDP, not the government. The government isn't 50% of GDP, but the debt is.
How is the Canadian dollar reacting to the budget and a possible election this year?
Well, the Canadian dollar didn't react to the budget at all. It came out on Monday, but on Wednesday, the Bank of Canada said they were going to. So this is the other big thing that's going on. In order to finance that $350 billion deficit that we talked about, the government has chosen to sell the bonds that they're issuing to the Bank of Canada rather than to the market. So if they put it on the market would say, well, if you want us to buy all those bonds, we need a higher interest rate. So what they've done is they've sold them to the Bank of Canada, and the Bank of Canada is willing to keep the interest rates really low and accept those bonds at really low prices or low yields. So now, in the space of 1 year, the Bank of Canada now owns 40% of all the bonds issued and outstanding since 1867. Not just in the last year, but since 1867. So the only other country in the world that's like that is Japan, but they've been buying their bonds for years, and they're at 46%. So to give you some idea, the U.S. government owns about the U.S. Federal Reserve owns about 17% of all their bonds. So so what happened on Wednesday was, and so they've been buying $4 billion worth of bonds a week. So in other words, $200 billion a year roughly. And they announced on Wednesday that they're going to slow down on the buying. So so that was expected, that they were going to announce a slowdown. And a rumor came out just before the announcement that they weren't going to slow down the buying. They were going to keep buying at that rate. And what happened then was the dollar dropped a full cent, from 80 cents down to 79 cents. And then they came out with the announcement, and the rumor was false, and they went ahead and reduced the thing. So the market doesn't want them to keep buying bonds at that rate, because eventually they own all the bonds. And so there's not that many outstanding. If they keep buying $4 billion a week, eventually they'll own them all. So they're distorting the market in a big way. So basically, the Bank of Canada is distorting the market by buying all these bonds, and the government is with its spending, is distorting the market by spending all this money. So we've got these two huge distortions in here, and how do we get out of it? That's the question, and I don't have an answer for that.
The spring housing market is on fire. Do you expect the bull market to continue?
Well, I think what's happened here is that, a number of things, but we talked about this $350 billion deficit. Well, that money was supposed to go in to stimulate the economy, but as far as I can tell, what's happened is it's gone into people's hands who are now using it to buy houses. So it's not what the government was hoping for. And, but you can see the mortgage debt has gone up, amazingly. The government debt has gone up, but also household debt has gone up and corporate debt has gone up. All three sectors. So I guess one of the things that probably happened, this is just a guess, but people that had adult children living in their homes under COVID, when everybody was home all the time, just couldn't stand it. So they said to their offspring, I'll give you any amount of money just to move out, go find something. And so, of course, they went out and looked and said, well, there's nothing to rent, I have to buy something. So, well, here's some money, go buy, and we'll co-sign the mortgage as well. So in my book, I say never, never, never co-sign a mortgage. And yet I'm told by people in Toronto that most of the applications that come in have a co-signer on the mortgage. And that makes sense, because how can people afford to buy these houses at these prices with a young person's income? Also, the incomes are probably not as solid as they were before, so there must be something else going on, and I think that's what it is. So, but I think it's going to like when a fire burns too hot, it burns up all the fuel, and then the end comes, and then you just have ashes. And I think that's what this is happening. This is a surprise to me, of course, that we got this additional bubble on top of the other bubble, but it's burning so hot that it seems like it will fade pretty quickly. I did see one sign of it fading in the form of a huge number of housing starts, which of course is new supply, and a huge number of new listings, a big surge in listings in the Toronto area just in the month of April. So the combination of those two things may cool this off.
Are we experiencing the kind of housing bubble that bursts?
For sure we are, yes. Well, we've had the bubble going now for many years, of course, and somehow the belief of Canadians that house prices always go up, combined with the willingness of lenders to lend more and more money to people with incomes that haven't really risen very much to meet that price, kept it going for longer than I thought it would. But these bubbles like this always burst, and they always have in the past. So I doubt very much that this bubble will avoid that fate. It'll end up bursting like all other bubbles, and then we don't know what the catalyst will be. But there is some concern about interest rates going up, because inflation is ticking in at 2.5%, and even inflation expectations now are bordering on 3%, which is, how do you have 1% interest rates when inflation is 3%, right? So that would be enough probably to see the bubble burst.
Are people still moving from cities to the burbs and small towns?
I hear that they are. I don't know. I don't have anything other than anecdotal evidence that people are, there's panic buying going on everywhere, and of course that's just a sign of a mania that's out of control. And of course there'll be some buyer's remorse if people don't know what it's like to live in a small town, and they're not used to it. They may have thought they did a brilliant move by selling their Vancouver home for $1.5 million and then buying something somewhere else for less than $1 million. But it's a different lifestyle.
Yeah, things are closed on Sunday, and nothing's open after 5 or 6 o'clock at night.
And sometimes the places don't exist, but you think, I'll just go down here and pick out. Oh, wait a minute, no, I have to.
Yeah, you got to drive 60 miles to go find a new furnace.
Yeah, exactly.
Yeah, and they won't deliver because you're out in the boonies. The Bank of Canada is recommending stiffer stress tests to cool down the housing market. Is that a good idea?
Well, yeah, they have this stress test thing where if you have a 20% down payment, so the rules on CMHC are you can put as little as 5% down, and the rules are quite strictly administered on that, and they always have. But on the 20%, if you can muster up 20% down payment, maybe with the help of the bank and mom and dad, then the rules were much looser, let's say. And the banks have quite a bit of flexibility. So they're proposing that they put a stricter stress test on those by making them qualify at a higher interest rate. And like every time they've had these suggestions to close the loophole, I'm always surprised that the loophole even existed in the first place, right? So why is there a loophole? Like why, but that's the way the regulatory system in Canada works. The regulator has said, I've got the quote from 2013, the head of the OSFI, the bank regulator, said, we trust the banks to know how much risk they're taking, and we trust them that they won't want to take too much risk because they wouldn't want to hurt their bank. So that's the attitude. And the banks are the ones that have the computer models that show how much risk they're taking. So the computer model tells them that if you put 20% down on a house, for the last 30 years, nobody that's put 20% down on a house has defaulted on a mortgage. Then they get the attitude that they don't have to check if you've got income or if you've got a stable household or if you got any of these. Just 20% down and no further questions asked. And so the regulator's now saying, no, we should still test these people, even if they come in with 20% down. I don't expect that anything will come of it. It's always couched in the form of recommendations, and I really think that because it's been so long since we had a housing crash in this country, it's basically since 1990 to 1995 was the last time. None of the people that are making these decisions are aware of the possibility that house prices could go down 20 or 30% and stay down for a while like that. So they're making their decisions based on house prices, always going up, or at least always staying pretty stable, and Canadians always making their mortgage payments. That's the way it's looked at.
While the rest of Canada is enjoying a house building boom, housing starts in BC are declining. They went down 16% last year. They're going down 9% this year. They're still projecting a downward trend in housing starts in BC for the next couple of years, and we're the most expensive housing market. Is this going to make housing even less affordable in British Columbia?
Well, I'm not sure, but the big boom in housing starts, which came out this week as well, and it was it's over 300,000 units, and the peak numbers before that were 200 to 220, and they were fairly regularly in the 200 range. But almost all of that increase is multifamily, so high-rise multifamily. So the problem, and I'm not an expert on Vancouver, but my sense is there's not really much building of single-family homes, so it has to be high-rise, and I understand that getting permits for high-rise apartments is extremely difficult. Plus, there was some suggestion that perhaps Vancouver is getting a bit overbuilt, especially with the new tax that has been introduced by the federal government of 1% on vacant property. So you don't have that possibility of people buying 10 condos in Vancouver and just sitting on it as a store of value. Something that I never understood, but apparently people were doing that and leaving them empty. They now are going to make you pay a 1% tax if you decide to leave them empty. If you're a non-Canadian, non-resident owner of an empty apartment. So I think what's happened is the multifamily is slowed down in Vancouver, and that's why they aren't keeping up. But everywhere else in the country, people are building like crazy, which of course, if you get enough oversupply, then that could also lead to the bubble bursting as well.
We'll have more with Hilliard MacBeth when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, with inflation and money printing in high gear, are interest rates likely to move higher anytime soon?
Well, certainly the tick up in inflation is a serious concern. So the central bankers all over the world have noticed this inflation. They call it inflation expectations. So right now, for 2 years out, people are expecting in the U.S., which is where we have the most widely followed data, a 2.6% inflation rate, which is quite an uptick, and it's the highest it's been in more than a decade. So if that happens, it's going to be very difficult for the central banks to continue to buy these bonds to keep interest rates low, and they might have to allow interest rates to rise where there is a premium above the inflation rate. So normally, if inflation is, let's say, 3%, then the interest rate on bonds should be at least 4%. You should have at least a 1 or 2% cushion, 4 or 5% for a bond above the inflation rate, and that's called a positive real yield. Well, right now the yield is extremely negative, and that there's a reason that might be correct, in that this inflation is going to be transitory or temporary, and inflation rate is going to come back down again. But there's some problems with that whole scenario, because the only way inflation could be transitory would be if the economy is very weak. And if the economy is very weak, why is the stock market trading at record high levels? So there's something in this whole equation that is wrong. There's either the economy is very weak, in which case inflation will be a temporary thing, but then the stock market's way too expensive, or on the other hand, the economy is very strong, inflation is rising, the stock market's booming because profits are going to boom, and then it doesn't make any sense to have interest rates at 0 or even at 1 or 2%. They should be much higher than that. So something's going to break here. Something's going to give the pressures are pulling in different directions, and one of the rubber bands holding this together is going to snap, and I don't know which one it is, but we'll see pretty soon, I suspect.
Is bank mortgage lending currently liberal or conservative?
I think the rules are still pretty loose. So and it may be informal, it may not be written down, but I get the impression that during the COVID recession, the lenders will be pretty aggressive because technically, if they looked at the unemployment rate, they would have had real trouble finding anybody to lend a house to. But of course, if they get that cosigner of the mortgage, which as I mentioned, I've heard very common now, then they don't need to worry about the income of the young people. They've got the backing of the older people who have more assets. So the reason I say never co-sign a mortgage is that if things go really bad, if there's a major crash in the housing market and the young couple is underwater by 100 or 200 or 300,000 on their mortgage, they can walk away from the mortgage. Now, they might have to declare personal bankruptcy, and that's not very pleasant, and there's a stigma attached to that. But if it's happening to everybody at the same time, the stigma isn't that large. But once the older generations co-sign the mortgage, they can't walk away because it would just mean taking the assets of the parents, of the grandparents. So it's absolutely, for certain, not worth it to co-sign a mortgage. The benefit that is held out by the lender, like maybe a slightly lower interest rate or something like that, or being able to get the loan for a larger amount, just isn't worth the putting the whole family at risk like that.
Could buoyant stock markets have led to the high-end home buying we've seen recently in Vancouver?
Well, there's still that whole thing about money laundering in Vancouver real estate, right? And the Peter German report came out in 2015 and said that there was as much as $16 to $20 billion going in and into Vancouver real estate alone. But they also pointed out in this report that other provinces like Alberta had a large amount of foreign money coming in as well. And now I don't know how accurate those things are. They couldn't really tell for sure, so they use things like, well, if it's a numbered company, we'll assume it's suspect kind of thing. And sometimes that isn't the case just because it's a numbered company. But obviously there's a lot of it. So whether it's related to that or whether it's related to the crackdown moves in Hong Kong and worries in Taiwan that there might be some moves by the mainland China, there's something that must be pushing it because generally the local people just don't have the incomes to be able to afford that. And pretty much everybody that has some wealth would already own at least one or two properties. So you'd have to have either new people coming in or money that's coming in from foreign destinations to make that work.
Have low mortgage rates created a great opportunity to refinance mortgages, turning homes into ATMs?
Well, the thing about low mortgage rates is in Canada is that they only last for 5 years, right? So if people take out a bunch of new debt based on the low mortgage rate today, and then in 2026 the rate goes back up to 4 or 5%, that's going to be pretty suspect, I think, and that's not going to work. So I think that in the jurisdictions like the U.S. where the mortgage is 30 years, absolutely. But if people are doing it in Canada, and I suspect they are, I'm sure they are, it's a pretty foolish thing because they're just going to, they won't have paid down that debt. 5 years will go by pretty fast. It's unlikely they will have been able to pay that debt down, so they might end up having to service it at a much higher level. The service level on the mortgages in Canada is at 15% of income. In the U.S., it's below 10%, and that's during a time when interest rates are record low levels. Imagine if interest rates went back to a more normal 4 or 5%. The servicing of that debt is going to be impossible for a lot of people.
Do you think people are being pushed to the breaking point with the ongoing implementation of the Great Reset and Agenda 2030?
Well, I think they are at the breaking point, and that's what surprises me so much with this renewed interest in going further into debt. What I tend to look at is not so much the policies, but the but the amount of household and corporate debt in the private sector. And it was at record high levels before, and now it's even higher than it was before the recession started. So all of that government money that came out that was transferred to the private sector could have been used to pay down debt, but apparently it didn't get used for that. It got used to help maybe offspring get into even more debt or other things. So there is a feeling that we're at a turning point here in some set, and there's some exciting things happening which may not help Alberta very much, but the concentration on renewable energy and the opportunities in the clean tech sector are actually pretty phenomenal. I was looking at hydrogen, for example. I was initially quite skeptical of hydrogen, but now I'm starting to realize that there's some aspects of it that will help, for instance, with things like steel and cement that regular other methods wouldn't work. And when you look at volumes that are going to be needed in terms of new energy and new facilities to handle some of these challenges, it's just absolutely mind-boggling. There's going to be a shortage of a bunch of materials like nickel, copper, and manganese, depending on what they decide to use to make all these things like batteries. And it's going to be pretty successful for a lot of people. But people do have to make a change. So it's a turning point. It's no longer business as usual.
Does the Trudeau government seem to be working for or against Canadians?
I think they're thinking about the next election because they have a minority government, and the idea is that the election. I think the election was going to be called the spring after this budget, and they've decided now to put it off because of the resurgence of the COVID virus, especially in Toronto. Toronto's a key area for them. Tends to vote Liberal, and so for re-election and with the majority, I think they decided that they would put it off till the fall. But I suspect we'll get an election before the end of 2021, and that's what they're thinking about. And they're trying. Of course, and the way you get people to re-elect you is to do what they want, what you think they want you to do. So who knows? I mean, half the people want house prices lower so they can afford to buy one, or maybe that's not half. It's probably a third of the people. And then 2/3 of the people would rather that the house prices didn't go down because they already own one and they like the wealth that it gives them.
Your thoughts on universal basic income?
Well, I think the world's headed in that direction. I mean, they've got more and more people now that receive payments from the government when there's a recession. It's almost like the government's decided that recessions are something that we're not going to allow anymore, and that we won't allow them to happen. Well, the only way. And we tested it in the last 12 months, and if you go into a deficit of $354 billion in Canada, you don't get much of a recession because people still have money. I'm not sure it's the right way to go. It's kind of nice to have these recessions where people learned, that some of the behaviors are risky and maybe they shouldn't do them. But it seems like the world has decided that we want to help people get through these recessions without any suffering. So if that's the decision, then we're going to have to somehow figure out a way to transfer money into the people's hands on a regular basis, whether they're working or not. And it's not necessarily a terrible thing. One of the things I'm reading lately is that all these business people, especially in the U.S., but in Canada too, are having trouble finding employees. So the unemployment rate has dropped quite a bit, but it's still much higher than it was before the recession. But they're still having trouble getting people to come out and apply for the jobs. So you could say, well, they're not paying enough, or maybe people just got too comfortable with working from home, which is, they like the flexibility. So we're heading into uncharted waters here for sure.
I don't know if we discussed it in our last show, but a survey found a third of the Canadians who were allowed to work at home said they would rather quit than be forced to work at the office full time again.
Yeah, I mean, it depends on your situation at home. I'm really enjoying it. Like, I'm getting a lot of work done, but I'm lucky enough to have a good space, and there's no, young children running around, or no older children running around either. It's just the two of us, so it works really well. The only challenge we had was the Zoom. If there's too many Zoom calls going on in the household, sometimes the internet froze, so we got that fixed up, hopefully. But other than that, because everything's online now, so but I do miss the interaction with the people. So we had to go into the office a little while ago because we moved offices from one floor to another in the same building, and so I had to go and unpack my boxes and all that. And it was very nice to see all the people, but I don't know from a productivity point of view if it actually works that well. I think if you've got a self-motivated employee, they probably get more work done at home, but some people really need that social interaction as well.
Could Canada be heading for an inflationary recession or even depression?
Well, I don't know about depression, but I certainly think that we're actually in a inflationary recession already. I mean, we're still in a recession by all measures. They definitely have not said we're out of the recession yet, and we've got inflation. I mean, we've got inflation in food and energy and lumber. Lumber is more than tripled, I think. The cost of building a house has gone way up, so we've got a really strange situation where we have a recession. A lot of people have lost their jobs. A bunch more people have a job, but they're not getting paid as much as they're not getting the hours, and yet the cost of living's gone up. So that's inflationary recession. So I don't know what the solution is. It's I think part of it is supply chain issues because of COVID, and so they presumably, if the vaccine gets widespread enough, those supply chain issues will sort themselves out. But I don't know. We're going to see probably more inflation before this is over.
Well, apparently when that super container ship got stuck in the Suez Canal for nearly a week, it has caused a shortage of garden gnomes in Great Britain, and they're panicking to find garden gnomes for this spring.
Yeah, I don't know garden gnomes, so I don't see them too much around here. I guess they're popular. Well, I did hear from, I had to go into the camping store for something, and I talked to the people there, and they said, we're not getting the shipments, and they said, the containers are so scarce to get stuff that people are getting their shipments bumped from a container, so I guess somebody could go and bribe somebody to load their stuff on a container ahead of somebody else's. So they said, we just never know when we get the next shipment. And of course, camping has been phenomenal because people can't go on airplanes. So, in Alberta and BC, everybody's going out into the wilderness. And so, they were hoping to have, I asked them, are you going to have a good year? And they said, well, if we can get the shipments in, but there's a shortage of space on the ships to get the stuff.
Well, I live on the waterfront in New Westminster overlooking the small harbor here. It used to be packed with container ships, and right now there are no container ships out there. And it can go for days with no container ships.
You know what the problem is too, is that they if you send the container back empty to China, let's say, just to use that as an example, because It's not always China, but it often, what if it doesn't come back? What if somebody in China decides that it's more urgent to send that stuff to Italy or to Brazil or something like that? So, and the other thing is it's very expensive to send that container back empty. So, if somebody could figure out some way to fill those containers with something that was going towards Asia rather than waiting for the stuff to come back from Asia. But, nobody so far has figured, you can't put coal or grain or anything like that in those containers. They're not designed for that, but I think that would be a great business opportunity to figure out what to ship in those empty containers.
I just saw a story. In 4 years, China's population will start to decline, and its leaders are worried about both a loss of workers and a loss of consumers. Is that going to make China even antsier and maybe even more aggressive as it reaches around the planet trying to take over the dominant position held by the U.S.?
Well, China's got this Made in China 2025 plan, and all these 5-year plans that they've had since 1980 when Deng Xiaoping was there, they pretty much always met the goals of the 5-year plan. So they're talking about having a more independent economy that isn't necessarily dependent on selling everything to the U.S. and other parts of the world anymore. And so they really want to get to where they can have their local people consuming their stuff more and making more stuff locally. So, they're putting a huge push on technology and artificial intelligence, things like that. And they've got a lot of room. Like, for instance, just to give you an example, in North America, when somebody buys a car, they always have a car to trade in. So the dealer takes the trade in and then sells them a new car or whatever. Well, I forget the number, but some significant percentage of people in China, when they buy a car, they don't have a car. They're going from no car to car, right? So it hasn't been like that in North America for decades, I don't think. So they've got a tremendous amount of local consumption that still could happen. They're still relatively underserved in terms of the local people. And it's been an export economy, and it has to shift to a local consumer economy. And there's lots of room for it to do that without a huge increase in the population. They just have to start switching their expenditures. But one of the issues in China is that they don't have a very good social safety net. So people save a very large amount of their income for when they get older and they can't work anymore. And the government hasn't put in the things like the Canada Pension Plan and the health care and all that we have. So people are very cautious about spending money on stuff. And so that may change. I don't know. But the growth rates that China was getting of 6, 7, 8, 9, 10% are more likely to be similar to the rest of the world, around 2 or 3% going forward. And the consumption, the local people will start to consume more, I suspect.
If the major currencies hyperinflate at the same time, would it matter?
Yeah, it's a great question. This thing that we started talking about, the government deficit in Canada and how Canada had done so much more than everybody else in terms of spending their way out of the recession. And that's the issue. If you do something that's out of line with the other big partners like Europe and the US, that's how you can get into trouble with your currency, for example. So the Canadian dollar is 80 cents. It dropped a penny when that rumor came out that they were going to keep buying all the bonds, and then when the announcement came out, it recovered the full cent. But it gives you some idea. It happened within 5 minutes that the Canadian dollar dropped that fast. So if everybody's going in the same direction at the same time, then it shouldn't really matter. But that's probably not the way it's going to happen. For instance, the European Central Bank, I checked when the Bank of Canada came out on Wednesday, I checked what's happening in the U.S. is similar to Canada, kind of not quite as far along as Canada, but similar in terms of pulling back on the bond buying. But the Europeans are saying we might need to do more bond buying because their economy hasn't recovered as much yet. So there could be a spread there, and could be a differential. And that's exactly where the issues start with currencies. And it usually shows up in the currency.
Do you think we could see higher highs for gold and silver this year?
I think so. Yeah, I've been pretty positive on gold for a while now, and I like the space. I'm not. Of course, I guess you're either a cryptocurrency person or you're a gold person, right? I don't know if anybody that's both those two things, but I kind of like the old-fashioned gold. And with all of this bond buying, it's all over the world. Japan, Europe, Canada, the U.S., they're all doing the same thing, buying the bonds from the government, which basically allows the government to spend what they need to keep the economy going, but also it creates this additional money that's been spent into the economy. The possibility exists that the currency would devalue because of all that additional money that's floating around in the system. And so people might panic and say, well, we better buy some gold to protect ourselves. In the 1930s, now we're not in, it's sort of last year, it looked like we might be headed into something similar to the 1930s, but then the economy recovered so quickly. But in the 1930s, when the economy didn't recover and they took the dollar off the gold standard, the government had to ban the ownership of gold because they were worried that the citizens would take their money and put it into gold, and then the money wouldn't circulate in the economy anymore. So that's the issue, and that same issue applies to Bitcoin as well. I think if everybody's spending money gets caught up in Bitcoin wallets somewhere they've lost the password to, then that money isn't circulating in the economy anymore.
Are people from mainland China still moving to Canada, or are they leaving Canada?
It's a good question as well, and I think the numbers came out recently for the population growth, and it's the lowest it's been since records started to be kept in 1916. So the lowest for more than 100 years. So I get, from that point of view, I would say no, it's the people are not arriving in Canada. The federal government announced a program to try and bring in 400,000 people a year, but that's not happening. And of course, there's different statuses. There's non-permanent resident, and then permanent resident, and citizen. And sometimes people are here for a year or two on a temporary work visa, and then they become permanent residents if they're allowed to, or if they choose to, and then they show up in the numbers. So, but my sense is with the COVID, especially with this third wave or second wave, whatever it is, where India is in such large difficulties with COVID, that the amount of immigration is going to drop even further. And without immigration, Canada's got the issue of the population is quite a bit older. So we don't have we're not like Nigeria, where the average age of the citizens is 18 years old. So our population will grow. Will probably not grow much at all without immigration.
What's the latest in electric vehicles?
Well, so Tesla's got like a 5-year head start, something like that, and now all of the manufacturers are realizing that they have to get going with an electric vehicle. It's changing very rapidly, and they've all announced models. Some of them have announced that by 2035, I think GM did, they will only have electric models. Toyota, up until this week, was very silent, and now Toyota's come out with an announcement about a bunch of models, but Toyota's different. Of course, they've had the hybrid for years, the Prius, and they still are kind of hung up on hybrids, and they're hung up on hydrogen cars, which probably make no sense. And they even have another thing with this, a solar panel on the roof of the car to recharge it as it's driving, which also makes no sense. So, I guess the big ones are, Mercedes-Benz. It's out, their top of the line Mercedes of the S-Class is going to be available in an all-electric, car fairly soon. There's Porsche has a Taycan, which is available. And BMW has at least one or two models as well. So it's happening. It's having, one of the bigger models now is the Volkswagen. Volkswagen is going to have a large number of models fairly soon, but so far relatively limited penetration into the market. Tesla still dominates the electric car market quite a bit, and the electric car market is still a tiny fraction of the total car market.
What sectors of the economy are you currently keeping a close eye on?
Well, I'm watching really closely the renewable energy. As I mentioned a minute ago, the amount of money that we're talking about is enormous. So the GDP of the world is $100 trillion, the trillion with a T. And I think in Bill Gates' book, he says it's going to take $50 trillion to convert all of the things that need to be converted to electric or other methods to lower the carbon emissions over the next 30 years, from 2020 to 2050. So that's roughly $1.5 trillion per year, which would be a 1.5% commitment of the GDP of the world. So that's not that great an amount, but the thing is, we're at a tiny, tiny fraction of that if we're actually going to get to the point where greenhouse gas emissions are net zero by 2050. And everybody's announced it. All the countries have announced it. Most of the major corporations have announced that's their goal. But they don't realize, I don't think anybody really understands the enormity of the amount of money that's going to be put into that. So there's going to be some big winners and probably some losers as well in terms of who gets that money and how it works. So, for instance, if hydrogen becomes a big thing, somebody has to make the electrolyzers that are used to make hydrogen from water. And if wind is going to be big, then there's several companies that make the wind turbine. China actually is big in all of the above. So China has a lot of companies that make wind turbines, a lot of companies that make solar panels, and those solar panels come from China. They make a particular type of electrolyzer for making hydrogen out of water. They're advanced in every aspect of it. But if you don't like the Chinese stock market, if you're worried about what companies are like over there, then there's a limited number of choices. And I think it'll be a great area for the next 10, 20 years, even though prices have run up quite a bit in the last 2 years. But careful stock selection is still really important.
Is there a lot of money being made and lost in these uncertain times?
Yeah, I think so. Well, I mean, the big thing is, this is the most surprising thing of all, is that the stock market's within a couple of percent of all-time highs, and yet our economy is in such shaky ground. So that's the big thing. We're talking 1929 levels or 1999, 2000 levels, or even beyond that, with today's levels in the stock market. So it's the thing is, they say it's priced for perfection. So if we get a second dip in the recession, or we get something else happening, then that's where the big risk. And of course, we had that flurry in January with Reddit and GameStop and Robinhood investors, and that hasn't going on. I saw a stat the other day said that something like 40% of all millennials have bought Bitcoin, or at least traded it at one point. So I obviously haven't talked to very many of them, but they're doing something out there. They do it on their phone with an app. And, so there will be lots of money made, and there will be lots of money lost. There's no doubt about that.
A court ruled the Alberta government is not compelled to provide evidence that COVID-19 exists. Your thoughts?
Well, it's one of those lawsuits that has been going on since the 70s. I remember Peter Lougheed took some cases to the Supreme Court to test some constitutional issue with who owns the oil and gas rights or something, and the governments in Alberta tend to do it all the time, and I think it's quite cynical. I think they know they're going to lose, but they're trying to pander to a faction of the voting public that they want to keep happy, keep them, well, at least keep them from being too unhappy. And so I don't know. I haven't seen that lawsuit particularly, but that's what it sounds like.
Hilliard, again, where can people buy the second edition of your book, When the Bubble Burst, Surviving the Canadian Real Estate Crash?
You can buy it in all the bookstores and online, through the bookstores online, and with Kindle or Kobo or any of those reading device versions. It's available in all those categories.
Hilliard, thank you so much for being on This Week in Money.
Nice to be on the show.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodGroup.com. He was speaking to us from Edmonton. Coming up, Robert Campbell, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Robert Campbell, publisher of the Campbell Real Estate Timing Letter online at realestatetiming.com. He's also the author of Timing the Real Estate Market. He's speaking to us from San Diego. Welcome back to This Week in Money, Bob.
Hey, thank you for having me back.
Bob, can you tell us a bit about your book and the Campbell Real Estate Timing Letter?
Sure. A little bit of background about myself. I'm a real estate timer. A little bit of background about myself. I'm from a development building family. I tell people that I was born on a building site with a skill saw in my hand. So I've been around this business/investment arena for my entire life. And in 2002, I wrote a book that using some of my research and personal experiences, both my own and my family's, because they were in the business, for 55 years of building and developing in Southern California. I knew the cycles, so I identified them. I checked them against what really happened in the market, certain key indicators, and wrote a book about it. 5 key indicators that you should focus on. And don't overcomplicate it, don't think, but it has if you put them in a model, it has a success rate of about between 80 and 90% historically of correctly identifying which way housing prices are going to go which includes identifying the peaks and valleys of real estate cycles very accurately. So it's a really valuable tool if you invest in real estate.
The Dow hit 34,000 points. Could the stock markets continue to rise, or have they topped out?
No, there's an old saying in the investment business: don't fight the trend. What's the trend? The trend's up. People have been calling for a correction, for the last 3 or 4 or 5 or 6 years. The trend is up. Just honor the trend. Don't try to make predictions. Is it expensive? You're damn right it's expensive. Super expensive. It's just like California real estate back in the last real estate boom. From 96 to the year 2002, housing prices doubled in 6 years. People go, oh, this has to be it. Yeah, really? And during the next 6 years, they doubled again. So they went up 200%. So the point of what I'm saying is you never really know, Jim. You don't know how crazy markets are going to be. And as long as the federal government keeps printing up money like crazy and handing it out, there's certainly not a shortage of liquidity or incomes. People have a lot of money, and they're bidding the price of all this stuff up.
With the COVID recession of 2020, are we likely to see another recession anytime soon, or have we crawled out of the 2020 one yet?
That's an impossible question to answer. I mean, as long as the federal government keeps spending like $3 trillion a year that they don't have, and the Federal Reserve is printing up another 2 or 3 trillion to hand out to people that have suffered because of the COVID pandemic, who knows how long this thing can go on? Is it artificial? Of course it's artificial. If the U.S. government deficit spent $10 trillion, the U.S. economy would be super humming. I mean, is that sustainable? No. It's not sustainable at all. Pretty soon you'll have a currency crisis on your hands. I mean, you'll devalue the dollar, inflation will go roaring up. I mean, and inflation, people think, oh boy, that's what we need, more inflation. No, we don't. I mean, do you know who inflation benefits? It benefits the top 10% because they have assets. The bottom 10%, the bottom 90%, they get killed, Jim, because whatever increases they see in their incomes is far outweighed by the increases in costs and in products and services.
Are any of the U.S. housing markets flashing a buy or sell sign?
They're all on the buy side, every one of them. Not only are they, and I track like a total of 25 housing markets nationwide, which includes 6 in California. Most of my subscribers are for California because we're the boom and bust state. I mean, if I wrote this book in Oklahoma, I doubt I would have the following I have. In Oklahoma, during a good year, housing prices go up 3% a year. During a bad year, they go down 2%. California just put a 0 behind both those numbers. But they're all on the buy side. And interestingly, speaking of California, I mean, isn't the word on the street kind of that everybody's leaving California, New York, and a few other places, Chicago, and they're all moving to Florida or something? California has as strong as the U.S. housing market is, and it is super strong. I mean, all the key indicators I follow that are worth watching are all accelerating. I mean, it's a net. Prices are going to go higher. There's very few red warning signs on the horizon. California is outperforming the U.S. So, I mean, you got to look at it that way. So, you got to be really careful who you listen to, everybody. I mean, just that, data speaks 10 times louder than opinions. And it's just everybody's got an opinion. Everybody's leaving California. I mean, how come housing prices are going up faster than anywhere else if everybody's leaving? So, I have a real common sense approach to market timing. And I found that, if you have a good model that has worked historically, just follow the market, just follow the model and keep your opinion out of it. And 9 times out of 10, you'll be happy you did that.
Well, would you leave San Diego, one of the most beautiful cities in the world, along with Vancouver, I have to say? Would you leave San Diego for the Dust Bowl of Oklahoma because the house there is cheaper?
Are you kidding me? I live in the beach in San Diego. This is the best place in the world to live. Why would I move to Oklahoma? I mean, you know why I'd move to Oklahoma? If I was poor. And the only thing I had was a lot of equity in my house in San Diego, and all of a sudden I'm in good health. I'm 60 years old, and I'd sell my home in San Diego, which has a median price of like $700,000 or $750 or $800 or some crazy number, and I'd move to Oklahoma City and buy the same home for $150,000, and I'd have $650,000 left over to try to survive on, you know, before I died. That's why people are leaving. Those are the people that are leaving California. They're forced to leave California. But the climate, just everything about California, I mean, even as kooky as Hollywood is, that's a draw. I mean, you know, so, and the weather, you can't beat the weather. Guys, hey, I've lived on the beach in Southern California my whole life. You could give me a $25 million house in Aspen, Colorado, the best place up there, and said, no loans, we'll cover all your property taxes and expenses. Mr. Campbell, it's yours free under one condition. You have to leave the coast in San Diego, the beach in San Diego, and move there. And I couldn't say no fast and no thank you fast enough. So I'm not moving anywhere.
Well, Oklahoma is so desperate for people, apparently. There's a city, it could be Oklahoma City, I don't know which one, where the city is promising to give you $10,000 if you move there.
Yeah, I think I heard something about it. Exactly. Oklahoma City, I mean, look, Oklahoma, I don't know. I mean, what do they do in Oklahoma? I've driven through Oklahoma when I was, you know, driving to, you know, Air Force officer training school down in San Antonio. I think I drove through Oklahoma. I mean, that's a pretty poor state, Jim.
As long as money printing continues, will the debt bubbles just keep growing?
Yes. Yes, it will. As long as the debt bubble, as long as they create treasury bonds, the government creates a treasury bond because they need more money, so that they put a treasury bond on the market, and then all of a sudden they get the Fed prints up the money, you know, in exchange for the treasury bond, and now it accrues interest that the taxpayers, you know, in the end, you know, have to service. So I mean, can this go on forever? No. I mean, it seems to be going on forever in Japan, but for instance, this all works well. You can keep piling on the debt as long as interest rates keep falling. You know, like you can have the national debt can be $20 trillion at like a normal interest rate of like 5%, or it can be $30 trillion at you know, half of that, and the debt servicing is exactly the same. I'm just using that kind of as an example. So yeah, but I am getting under the opinion, some of the people I follow, that I exchanged newsletters with Robert Prechter of the Elliott Wave theory. I don't trade off of his stuff, but he's no idiot. He gave me he's letting me use a 70-year history of U.S. interest rates. And you know what it looks like? It looks like the Matterhorn. And you're going straight up to 1982, these are U.S. interest rates, and now straight down to today. It's almost a perfect pyramid. And I'm just looking at that and saying, hey, I know history. Does this look like, if you had to be a betting man, do you think interest rates are going to be higher or lower in the next 5 years? You would have to say higher. I mean, everything returns back to normal. I mean, they went from extreme lows 78 years ago to extreme highs in 1981 when inflation got to 13%. Now they're down to, you know, record lows again. So being that most things in life are cyclical, you could kind of look at that and say, yeah, I'd say the risk of losing money investing in bonds would be greater than would be great right now, because I think interest rates are going up, especially if inflation goes up. And inflation is roaring, as everybody knows. The U.S. government says, oh, core inflation is like 1.5%. What total BS. You know, housing's going up, you know, 12% a year. Food prices are going up like 10% a year. Used car prices are going up like 10% a year. Medical's going up 6 or 7% a year. In other words, all the things you need in life are going up like anywhere from, you know, 7, 8, or 9%, and the things you don't need are probably going up 1.4.
Well, of course, the Canadian and U.S. governments back in the 90s, their solution to rampant inflation was just to remove housing and fuel prices from the CPI. And then, of course, everything came down to 2%.
Exactly. And then they changed the hedonics on it. There's a term called hedonics. Like, that according to, when you adjust for hedonics, which means like, you could buy a Model T car, let's say you bought a regular Ford 20 years ago, and it cost you like, $10,000. Well, today, that you can't buy a new Ford for $10,000. It costs $30,000. But the new Ford, it's more maintenance free, gets better gas mileage, it's got heated seats, it's got this and it's got that. In other words, what they're selling today has a lot more value in it than the car of the old. So when they adjust for all those value-added things, the cost of a new Ford in 2021 is still $10,000, which is total BS, right?
Yeah, I really don't need a rolling computer when I drive somewhere. I don't want a heated seat. I don't want a heated steering wheel. I don't want a dashboard that's nothing but a visual distraction.
You know how much this stuff... look, I have a 2000 Ford Explorer. It gets 15 miles to the gallon, and it has the hottest mag wheels on it that you could imagine. It's a really good-looking car, clean, no dents or anything, and that car looks great. I wouldn't trade that car for any of this new crap that they have. Could you imagine when it breaks how much it's going to cost to have it fixed?
And right now, too, there's an automobile shortage because of a chip shortage, and there's 200 chips in a new car.
Oh, I know. It's hard to get in. The used car market has gone up. The price of a used car, on average, has gone up approximately 10% in the last year. The used car market. I mean, everything's going up because there's more money chasing a limited supply of product, and that's certainly true in the housing market. I mean, there's no inventory. You look back over time, how often have we seen this inventory at these low levels? Never. So, I mean, obviously we're at abnormal levels, right? And when things get to abnormal levels, it's only a matter of time until what? Things revert back to normal.
Well, Bob, isn't one of the reasons why there's a shortage of housing on the U.S. market is that they had a moratorium on foreclosures, and usually banks are always selling off homes to either pay back taxes or to cover their mortgage debt, and so they're a bargain. Well, those bargain homes don't exist anymore.
No, they don't exist. And I mean, and how about this? How about the cost of a new home? That lumber prices, raw lumber prices, are up 400% in the last year over year. You know that I'm a builder, and I still work on my house all the time, to pimp it out. So I went down a year ago. I'd go to Home Depot, and a 8-foot construction grade 2x4 cost me $2. It's $7 today, Jim. Do you think that's a little cost inflation? I mean, the cost of lumber alone has increased the cost of a new U.S. home by $24,000.
Bob,
I don't know about everything else. I mean, I'm sure nothing's going down in price, right?
Bob, is it true U.S. Customs seized $1.7 million worth of lumber hidden in a shipment of cocaine?
I have no idea. When did you hear that?
It's a joke, Bob. But
well, I'll tell you
but it sounds like it could be true.
Hey, I'll tell you one thing. My investment portfolio is going up because in my backyard I have like 32 8-foot construction grade 2x4s and some beams. That's been my highest performing investment for the last 12 months.
Yeah, I'm thinking of knocking down all of my IKEA furniture and selling it piecemeal. Bob, are people using their homes as ATMs?
No, they really aren't. They don't have to. I mean, the trend has been increasing for the last 3 or 4 or 5 years, but we're certainly not at the level, the degree to which people use their homes as ATMs, like it was during the real estate housing bubble from like 04 to 06. Oh, I mean, that was just like free money. I mean, because the people bought the homes with no money in it. So now they had, so they still had no money, but they had a house that was worth $200,000 more. So they borrowed the money out so they could spend it. That works for a while too, Jimmy.
Are interest rates the elephant in the room for the real estate market?
Probably. I think so. I think one, houses are expensive. 2, interest rates. I mean, it just seems like, the Fed can control the short end of the market, and I'm with Robert Brecker and the guys over there at Elliott Wade. It looks to me like this is, we're at a point in time where going to revert back to normal. And is it normal to have like the 1-year Treasury bill yield 0.15%? No. It's unbelievable. You can have $1 million cash, which is a lot of cash, and back in the old days, you used to be able to roll 1-year CDs or 1-year T-bills and make 4 or 5% on your money and make $50,000 a year, and so you can still survive. Today, you make $1,600 a year on $1 million. That's how much cash is worth right now, which makes me, know what that makes me think, Jim? As a contrarian. Everybody goes, cash is trash. You got to get rid of all your cash. Everything's going up, and the value of cash is going down because of inflation. We could be near an inflection point in that thing too. Will interest rates start going up, and all of a sudden T-bill rates start going up, and CD rates start going up? Cash isn't going to be trash like it is right now.
Is U.S. real estate in a bubble, and does it look like the kind of bubble that bursts?
Well, it's certainly super expensive. Is it a bubble? I mean, that nationally we've passed the old record highs of 2006, which was clearly a bubble by about 10 or 15% or so, somewhere in that range. California, the old bubble price at the peak of the market was $600. The median price was $600,000. I think back in 2006. You know what it is now? $750,000. That's median price for the entire state. That includes, the Death Valley area, the high desert. I mean, where homes cost a lot less than $750,000. But I mean, California is super expensive, and that has shocked me to death. I never would have thought that in a million years. So, but in advance. But you know what this tells me? You have to be on your toes, everybody, all your time. You can't start making judgments about what markets can do, what they may do, or have subjective interpretations of what's happening. The only thing that's real is what's happening right now. So you can follow a trend, get into a trend, and what's the trend? The trend is up. You want to be long real estate. Well, what if it is? There are going to be warning signs, that you can follow. That's my business. That's what I do for a living. They give you about 3 months advance warning. That's it. And if you're too slow, I was busy or something, well, tough luck. Now everybody's going to know that, the trend is down. And you want to beat the crowd to the punch, right?
How are retail sales doing as some red states are opening up?
Well, I don't know about the red states, but I'll tell you, this is really interesting statistic. Retail sales, drives about 70% of the U.S. GDP. And if you look at retail sales over the past 30 years, you'll see it's almost linear during good times and bad. Because, people still need to buy things, buy things to live on, food and products like that. And all of a sudden, it took this big dump during March of 2020 because of COVID. And now all of a sudden they start printing all this money and handing it out as stimulus. Now retail sales are about, 10 or 15% above that old trend line. That's how crazy it is. And there's still 10 million Americans unemployed. The point of this is the U.S. economy is on life support right now, and the Federal Reserve Board is printing up as much money as they can to keep the markets elevated and us out of deep shit.
Are people having a tough time paying bills?
Well, I don't know, because you don't have to pay your bills. All you have to do is this: is say that you're a victim of COVID, so you don't have to make your student loan payment, you don't have to make your credit card payment, you don't have to make your auto payment. So there's probably not that big a problem, Jim. I mean, and you think anybody's going to send you through the third degree how you've been affected by COVID? I mean, we're all victims, right?
If hyperinflation happens in the major currencies at the same time, would it matter?
Yeah, it would matter. It'd matter big time. Because here's this. The purpose of a currency is to be a readily acceptable medium of exchange. So if all come out, and nothing's going to all hyperinflate equally by any means, and you're still going to be trying to get out of the paper currency into something else. And that's whether your national currency is Canadian dollars, U.S. dollars, euros, Russian rubles, whatever. It's a bad situation. I mean, we're not all going to hyperinflate everything to euphoric, financial bliss. No, that'd be the worst case situation. It would impoverish everybody, probably except the top, let's say 5%.
Should gold and silver be much higher than they are today?
Yeah, the gold market has always been manipulated, Jim. I mean, I've read books on it. I've read all these things. I was always, you got to read what the insiders know, and they explain how it's done and that, and it's very cleverly done. But the insiders know what they're doing, but they're willing to do it, allow it to pass, because a vote for gold is a vote against U.S. government or Canadian government. So who do you trust? You trust us or do you trust gold? I think I'll stick with the gold.
Yeah, I've never been lied to by a gold bar.
Right, and that's all you get with the government, right?
Bob, what's the latest on California politics?
Well, that's a good question. I stopped following it, Jim, about after the election because the whole thing was so corrupt through and through, just the whole thing, and that, they're trying to recall Newsom, it just seems like this crap. Everything goes on, and it never comes to a result. Like we're actually with, get him out of here. But I'll tell you something that, I'm out, this is just anecdotally what I'm seeing, and I'm a pretty observant person, because that's what I do for a living, observe, what's happening. People are starting to resist this to a certain degree now. That, in fact, I'm going to meet a buddy of mine out for a beer on next Monday, and all of a sudden we can sit outside, no masks, have fun. It's getting more and more closer to normal, and a lot of businesses are just saying, F you, come on in, let's go. And it doesn't seem like the law's being enforced. Okay. Now, I know it's different in a lot of places, like that in Michigan, for example. I mean, that they can't shut that whole state down fast enough. But I think there's going to come a point when everybody's going to go, enough's enough. Enough's enough. And if the government resists and say, no, it isn't, I think we're in a civil war right now. The only thing we're missing is the shooting hasn't started yet. I mean, this is crazy. These are crazy times, everybody. I was in college during the Vietnam War years, and there was a lot of protesting and a lot of unrest. It's nothing like this, I mean, even if depending on what side you were, pro-war, anti-war, we'd all go smoke pot together and have fun still. Is that the case today? No.
Are we at war right now, pitting good versus evil?
Well, I mean, that's a matter of definition, and I say yes. I advocate things like freedom of speech, the right to bear arms, the Constitution. I guess I'm old-fashioned like that, and I call that good. And the evil wants to destroy all that. So, based on my definition, yes, it's definitely a war of good against evil. And you know what always wins out? Good always wins out in the end. It may be a struggle. It may be a hassle. It may turn into a war, a bloody war, but it'll turn out for the best. The good guys will win. Isn't that what they tell you in Hollywood?
Going forward, is survival of the fittest likely to be a thing?
Well, it's always a thing. I mean, the survival of the fittest, the people that are most fit, that have the highest intelligence with where to put their investment, their retirement savings, at any point in time, that requires intelligence. And if you don't have that intelligence, you will not survive. So in that point, yes, that's exactly the case. Here in the United States, it's been generally true that the average U.S. American that reaches the age of 65, only 5% are comfortable financially, the rest are not. That shows you what a difficult game this is that we have. I mean, you have to face up to it. I know the wealth merchants don't like to say that, They'll tell you how to make $5 million in real estate, in 5 years with, no money, no brains, no job, and a crappy credit score. Those weekend seminars cost $5,000. Do they work? No. Yeah, they make the promoter rich, but that's not the way life is. And so all you can kind of do is your best to stay on top of things, move your money. My mantra is adjust, adjust, adjust. Adjust, adjust, adjust. And, those are my words. That's why I've always admired the Patriot head coach, Bill Belichick. I mean, that guy was playing defense. He was defensive minded. He played defense. And that's why he got the nickname Doom. And, most people that are negative, you think, do they have 6 Super Bowl rings? No. And he was negative in a good way. He was always worried about what could go wrong and was at least thinking in advance. He was always adjusting. And does he win all the time? No. Does he win more than everybody else? Yeah, a lot more than everybody else. So it's a good attitude to have. Like my dad used to say, dear old dad, he goes, the secret of success is not going broke. And probably generally that's probably a true statement at least more than 50% of the time.
Well, my attitude towards defense is screwing up the other guy's offensive plans. And believe me, it's easier to screw up than it is to be successful.
Yes, it is.
There's talk of a depopulation agenda. If there is any truth to that, what could happen to real estate and financial markets? Oh,
they would crash. They would crash. I mean, it would be, less money. Everything would be worth a lot less. Because there'd be less demand. So prices would, all of a sudden, let's just use an example like, 20% of the population dies off because of COVID vaccines. Okay. Then, is the housing stock going to go down by 20%? No. What, is demand going to go down by 20%? At least. I mean, if that kind of shit happens, it'd probably be dropped by 50%. So there'd be a huge downward adjustment. In fact, I laugh with my friends and I said, I've lived here on the coast in San Diego my whole life. And when I grew up here, there were 6 Little League teams in the area I grew up in. Well, now there's like 60,000 Little League teams. I said, you know what? I wouldn't mind if the population decreased by about 75%. It'd be back like the old days, where it only used to take me like 5 minutes to get to the beach instead of 25 minutes today. So, there isn't you gotta think about this positively. Those were good times back then. It's just less people. I'm down. I'm okay with that. I don't need to be in these traffic jams. What would happen to the free? Look at this. I just thought of this, Jim. Look at the freeway system. Let's say, I know there's a lot of scare stories going down here where the population is going to fall by 2/3. Do you think the U.S. highway system or Canadian highway system would turn out to be the biggest misallocation of resources in the history of the world? What would they do with all those freeways?
Well, I'm wondering right now, Bob, they did a survey in Canada, and 1/3 of the people who are currently working at home say if they're forced to go back to the office full time, they'd rather quit. And yet,
there you go. So all of a sudden, like anything else, does anything else last forever? No. If you want to make a building last forever, or something like that, the 2 materials that you use stainless steel or glass. Everything else deteriorates. And if you don't maintain even a concrete highway or a asphalt highway or anything, that thing needs to be maintained or it starts breaking up and deteriorating.
Yeah, even the pyramids are falling apart.
Oh, of course they are.
They're 5,000 years old, but
and I know this because I'm from the building business.
Yeah.
Stainless steel, that'll last 1,000,000 years, and so will glass. that you don't build things with you put a stainless steel skin on it. That's what you do. But who wants a stainless steel house?
Is health a lifestyle choice?
Absolutely. You and I've been having these monthly talks and stuff for a long time now. And so if anybody's, listening in that's heard me before, they know that health has always been my highest priority my whole life. And I'm in the money business. I like to make money. I like to be healthy more. Because I'll tell you, if you're not healthy, I don't care how much money you have, you're not going to be happy. So I'm really into that, and what I tell people is that it's a choice. I mean, in other words, and when I say it's a lifestyle choice, right now I'm in the process of trying to lose 6 pounds of fat from my belly, because I weigh 180 and I'm trying to get down to 175. And if my body fat drops to 13%, you might even see where I have abs again. And I know that's a heroic challenge, but that's what I'm trying to do. And so I've embarked on a diet, special diet that I use after all my research, low carbs, and I'm at my age, I'll be 74 next month. I'll probably, realistically, because I'm not fat or any mean, it's going to take me 6 months to lose 6 pounds. But whether you want to use 60 pounds or 6 pounds, it's, the process is all the same. It's a lifestyle change, Jim. It's not a diet. Because once you get to where you want to be, you want to be able to maintain it, to sustain that level. And if it's torture, like you drink water for a month straight, I mean, that's pure torture. Nobody's going to do that. So I'm doing something where it's like, I don't even feel any torture at all. And so I'm into my second month. I can see where I've lost a couple pounds. And if I lose 4 more, and it's all coming off my gut, that's the only place I have any fat. What fat I have, I think we're going to find out. This is my little experiment. But it's all about lifestyle. You just have to make the choice. And you say, I can't do this, and I can't do that. I mean, you can't be drinking. You can't be drinking beer. Do I drink beer? No. Beer's super fattening. It gives guys a gut. So it depends. It just depends how you want to look. But I mean, and it's not only how you look. More importantly, it's how healthy you are. How healthy you are. That's what controls. Good health is the number one defense against disease. I haven't had a flu shot in 26 years. And I don't know if I told you, I haven't had the flu in 26 years. So, I mean, it's like, why screw up a good track record, right? So I just don't need it, and it's all good health, and it's interesting stuff, and it's one of my value add things that, I'm probably going to bring to all my followers. Even though they know it now, they don't follow me specifically, like about certain things. I said, okay, here's how you do it, guys. Here's what you eat. Here's how much water you consume each day. I fast 14 hours a day, Jim. I don't eat 14 hours a day. When I go to bed at night at like 10 o'clock, I stop eating, and I don't eat again until at least noon. So, I mean, there's that fasting, and I'll tell you, especially when you get older, guys, you need every trick in the book to make this work out really well for you. It's not like you're 25 years old, right?
How important is weightlifting?
Extremely important for us guys. Because us guys, because it's one thing to be lean. Okay, you can be lean. Being lean's good. It's healthy. But if as you get older, if you're lean and you don't have muscle on your body that is the result of lifting weights, you look scrawny, Jim. You look scrawny. And what man wants to look scrawny? So I'll tell you the exercises I do. And I don't overdo anything anymore. One, because it's too tiring. But I do certain exercises. I lift weights. I run in the soft sand. I run up hills. I walk. You don't have to do all those things. But I'm telling you what I do. And because I enjoy doing them. And you will get fit doing those.
Your thoughts on saunas, hot tubs, and health?
Saunas, everybody. I had no idea the benefits of sauna. I just know that I love saunas. I've been taking saunas for 50 years, over 50 years. And I was at the gym before the COVID thing hit, and there was a couple of young kids in the sauna. I still take a sauna, I would say 5 times a week. And so these kids were talking about saunas, and they were talking about how healthy they were and all the benefits, this, and this. And there's this doctor that has these YouTube videos that's explained it all to them. And of course, I'm just listening. I never heard of any of this. And so I started talking to him, and I said, so this is all good, right? And he goes, absolutely. And I told him, I said, you know what, guys? I've been taking saunas. And I said, you know one of the biggest benefits of taking saunas was? It makes you look younger. And that's what they were emphasizing. So I told these kids, and I said, I've been doing this for 50 years. I didn't know that. And they said, really? And they said, how old are you? And I told them, 73. And they both pointed at me and said, see, it works. And that's a 100% true story, Jimmy.
Well, I've lost 27 pounds over the past year, and I'm hitting the swimming pool an awful lot. What do you think of that?
Well, there's a lot. You know what you should do? Whatever you're comfortable with, and whatever you're more likely to maintain. You couldn't catch me in a swimming pool. I don't like to get wet. I mean, I can surf and all that, but especially a swimming pool, I'm not a swimmer, so that wouldn't work for me. But if that works for you and you enjoy it, then of course that's what you should pursue.
I love swimming underwater. I wish I was a dolphin.
See, you have a knack for that. And so is swimming good exercise? Of course it's good exercise. I mean, but swimming by itself, see, I don't know. I mean, I've never been a swimmer. I mean, most swimmers, are they lean and muscular? Most of those swimmers, especially the women, are pretty big, aren't they?
They have shoulders that would make a lot of linebackers jealous.
Oh, I know. And the guy swimmers
and that's
too.
but that's what I'm noticing is my shoulders are getting wider and my tummy is getting slimmer. It hasn't done a lot for weight. Because I know from doing a medically supervised weight loss program, they're saying, calories count. That's where the weight loss is. But it's other things. So an exercise you like to do, then do it. You're absolutely right. I hate getting hot and sweaty. When you're swimming, you don't get hot and sweaty.
No. You don't get hot and sweaty.
We hear of people...
I just never got... So, but that's... there's other things. There's a lot of good ways to get in shape. You just find the one that's going to work for you, the one that you'll keep doing, because you're not going to keep doing something you don't like, right? You're not going to do that. It's like taking a water fast to lose, 10-day water fast to lose 10 pounds. I mean, in the next 10 to 20 days, that 10 pounds will be right back on you, guaranteed, because you can't sustain that.
We're both believers in water, aren't we? Drink lots of good, clean, healthy water. Yeah.
I drink half a gallon. Part of my program right now is I drink half a gallon of water a day. 4 16-ounce glasses of water. Even when I get up in the middle of the night to go to the bathroom, I drink 16 ounces of water, which really fills you up. But I maintain, Jim, if somebody did not, even if you held your diet constant, whatever it is, and you just drank a half a gallon of water every day, you'd lose a pound or two, depending on how much your weight is. You'd lose a pound or two of weight a month, just because when you drink water, that curbs your hunger.
Also, I just did a metabolism workshop last night, and they said you should consume 80% of your calories before 3 in the afternoon. The way the human body processes calories and your metabolism, you will lose weight that way or maintain it.
Well, see, okay, look, I'm not going to debate that, what works and what doesn't work. All I'm saying is that I wouldn't be able to do that. So I'm going with a 14-hour fast. I eat during the 10-hour window and I fast for 14 hours. And if it takes me 6 months to lose 6 pounds, so be it. Because when the 6 months get here, am I going to have to go, wow, boy, am I glad that's over? No, I'm going to be able to stay exactly where I'm at. So there's a lot of personal experimentation with this, Jim, that you have to find something that works for you, that you can do over and over and over again. I mean, like these guys go, oh yeah, I'm working on legs today, these muscle builders. Even some of these guys that win Mr. Universe and Mr. Olympia and all that kind of stuff, those big guys, they get their body fat down to like 5%. They eat tuna fish and water for a week before the competition. Do you know how many days that they're able to maintain their body fat at 5% before it goes back up to 10 again?
1.
Exactly.
Yeah, it's not healthy. I know former bodybuilders, they're not healthy people today.
No.
We hear of people...
you can't maintain it. It's torture doing that. But of course, they don't want any fat on their body, so everybody can see these huge muscles they've developed, right?
Yeah, and they all admitted they used drugs to do it as well.
Oh, they did that for sure. I still have abs, everybody. I have abs. There's just like half an inch of fat over them, so they're harder to see than they should be.
Bob, we hear of people retiring and moving to the desert. Are these great areas for health and aging?
No, they're not. I call it anti-aging. I mean, that you could, like, if you move to people in Las Vegas, people in Phoenix, just go there and spend a week there if you have to. But I mean, and I'm not saying those are inherently bad places, but as far as health goes, they dry out your skin and make you look old. Jim, my whole thing about life and health and all that, I'm into anti-aging, not accelerated aging.
Do you have any wisdom to leave us with?
Yeah, how about these words of wisdom? nothing good in life comes easy, guys. Have you noticed, Jim, how that realization becomes clearer and clearer the older you get? But I mean, it's a magnificent journey, guys. But you have to look at it for what it is, not what you hope it would be, or what they tell you in college, or what these weekend seminars are going to teach you how to be rich. You know, everybody how to be rich, because most people aren't rich. They can't do it. There's something happened somewhere along the line, and that all of a sudden, and also what's interesting, have you heard of the girl named Kathy Ireland, who was a
fashion model?
Yeah, she was a model. She was a swimsuit model on Sports Illustrated.
Beautiful blue eyes.
Yeah, she's like, I mean, this was like 30 years ago. Well, she was real motivated and ambitious, and after she did that, she started parlaying her good looks and her attention to health, you know, and try to make a good living out of it. And she was interviewed about a couple years ago, and they said, Kathy, you're wildly successful. What do you owe this to? She goes, you know what? The first 4 businesses I started were all failed. And pretty soon you find your way. I mean, Jimmy, that's more the rule of thumb than not.
Yeah, well, somebody said success is remaining optimistic after failure after failure.
Yeah. I mean, but all of a sudden they're all good experiences. I'm sure she was pursuing things that she liked. They just didn't quite hit it. And all of a sudden the timing is right. Her approach was different, but right. She made certain adjustments, and boom, she became really successful financially. And she looks good too. She was always a good-looking girl. She kept her weight down, you know. I mean, but that's interesting. You talk about people like this, and everybody wants to be an instant success. Wow. I mean, see, that's the expectation, right? And you're going to be super rich by the time you're 40. It used to be 35. Now people are being a little more realistic.
Bob, how can people find out more about your book and newsletter?
They can go to my website. My website is realestatetiming.com, just like it sounds. Realestatetiming.com, no dash, anything like that. And you can read about my book, see the book I published. You can see the timing letter that I publish. It's published once every 2 months. I'm sorry. It's for subscribers only. You know, and people will pay for good information, and so do I. So it's there. You can see it and see what I do, and see if it's interesting to you. And you can even take like a 2-month trial with it for I think it's only $30, and see if you like it. So I mean, if you're into making money in real estate, and whatever the investment arena, guys, timing is the most important element of all. It is timing. You can be brilliant and bankrupt if you get the timing wrong. So, I mean, but if you get the timing right, you can be an idiot and make a fortune. That's the way I've seen it. And most of these people that say, oh man, I bought right at the bottom, you know, and they're so proud of it, which they should be. I said, how did you know to buy at the bottom? You know what most people say? It was pure luck. Any honest person will tell you. I mean, did they have some strategy or key indicators they were watching? I mean, some critical analysis involved here? None. Zero. So, I mean, don't discount luck either, but it's a magnificent world out there, guys, and, you know, I love the challenge in all this, and I tell people, you know, with respect to health, I go, you know what? I'm 74 years old. You know what differentiates me from other people my age? I stopped aging. I hardly age at all, and everybody else is getting old around me. So sometimes you can win by default, Jimmy. I mean, you know what I'm saying? And also, final words, everybody, final words. Getting old, you can't get around getting old, but you can avoid staying old. It's a state of mind. It's total state of mind. I mean, I'll tell you that you got to be looking forward to the future. You never give up. You got new projects you're always working on. You love life. I mean, I'm 74 years old. I'm gonna try to get into a 75-year-old adult hardball league playing baseball.
Bob, thank you so much for being on This Week in Money.
You're welcome, and talk to you again soon. Take care.
My guest has been Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter, online realestatetiming.com. He was speaking to us from San Diego. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Hilliard MacBeth, and Robert Campbell. And thank you for listening. If you have any questions for the show, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. My guest is Larry Reaugh, CEO and President of American Manganese. Welcome back to Company Showcase, Larry.
Thanks, Jim.
Larry, the company was at a very important conference last week. What was it and what happened?
Actually, we announced that last week, Jim, but the conference took place yesterday, and Zarco attended, by virtual means, and did a very excellent presentation on the company. And he was on a panel and did very well on that. We have a lot of responses that are very positive on his presentation. I think we had over 500 on the presentation and over close to 500 on the panel. So it was well received and very informative. Certainly, a lot of the shareholders liked it. And I'm hoping that it attracted a lot more interest into the company. So it's been a good week all around, Jim. We didn't put out a press release this week, but everybody was expecting one. I could see it on the emails to me. Expect to have a release in such and such a time, but sometimes the timing isn't right for a release, and in this case, the release would be premature. We're waiting for results from labs outside of Cametco, and but we'll hopefully have a release next week on that, and we'll move forward. Now, I've also received not a lot, but a few criticisms about insiders selling on the stock, and I just want to explain what an insider is. An insider is either the management in the company or the directors, and they've been with the company. The directors have been with the company for several years, certainly over 5, and they've got a lot of them have a lot of skin in the game. And the stock has, when they first became a director, the stock was at 2 cents, and since then it's moved up to a high of 2.86. And currently trading at about 123. So, they want to take some money off the table. I can't blame them. It's their shares. It's their money. And certainly I've taken a small amount off, but if you added it up to the volumes that we have, it's a very small percentage. But it's certainly jumped on by the predator traders, and the people that go to the bull boards for their due diligence should realize that some of this stuff is just to defame the company. They've been losing traction on what they could defame us with, so naturally they act like we're selling tens of millions of shares into the market, but that is not the truth. It's a small fraction, and if you wanted to look at the total overall, it would be less than 1%, and we've traded well over 1 billion shares in the last 4.5 years, so that's an insignificant amount, and why shouldn't they take some money off the table? They're not only directors and insiders, we're investors in our own stock, and we have belief in it. I've exercised some options, and I've also exercised some of my warrants, and I've increased my position by about 880,000 shares. I don't see that on the bull boards,
And because some director has other situations that may involve raising money, maybe they want to get a new house or get a house, I don't know. But, suddenly they have a need for cash and they're going to sell a little bit of stock, and I can't blame them for that. And I don't think the shareholders should either, because maybe they're not sellers, but a lot of them are, because there's a lot of volume out there. And, why shouldn't the directors and management have the same opportunity that's presented to our regular shareholders? And so it really incenses me at times when I get these emails from people that follow the bull boards and, and are derogatory towards the company when they're reporting it to me. And, there certainly it's not justified. And what I'm trying to explain is there are several steps that have to go through. For example, if you had options, let's say your options were at 20 cents and you exercise them at $1. Well, immediately, according to the Canadian law, you have incurred a profit, or not a profit, a extra income of 50% of that total amount that you would have made. And that would be, say, out of $800,000, you owe the income tax $400,000. You may not have sold a share, but now all of a sudden you owe the income tax $400,000. Well, the smart money says you're going to sell enough stock to pay the income tax at least. You don't want to buy a share that bar something happening in the market tomorrow that knocks the stock way down when the tax bill arrives, and then all of a sudden you're looking at $400,000, and that may be less or more than the net value of the shares that you exercised. So, these are certain sort of restrictions. Options are not as great as people would think they are. They've introduced laws that have prohibited the upside of having options, and a lot of our directors are open to liability. They're open to all kinds of things that if management screws up, that they could be sued for, and we expect them not to take some money off the table now and then. So I'm not making excuses. I'm just saying this is just the way it works, and we should not criticize management. We've taken this company a long ways from 2 cents to as high as $2.80, and we've developed a process that is very strong. And when I say that, nobody else can use it. I get all kinds of stuff again from the bull boards that say the patents are no good and everything. Well, wow, I'm sorry to say that I read about 20 patents a day that are issued on batteries, and those patents are filed by some of the biggest companies in the world. So obviously they believe in patent protection. So do I. And that's patent protection and I talked about that last week, that is required. Now, on the plus side, you just keep reading more and more and more about more gigafactories going in, and I have to say congratulations to Shailesh Ureddy for his plant that's going in New York State, and he's finally got the final financing to build the first plant, or at least to build the first phase of the plant and have it operational. And I say congratulations, Shailesh. I mean, that was a tough fight because it was several $100 million that had to be raised just for that first plant. And, now he's got it. He's got the money, and he's building his plant. And, congratulations. I mean, we have some excellent people on our advisory board. Shailesh is on our advisory board, has been for a number of years. And I hope to see him have great success in what he's doing. I mean, I know it's been a struggle to get the money, and it's not like it's easy. When you announce a plant, everybody thinks, oh, yeah, it's easy. But it's not. It takes time and effort to convince the world that you've got the goods. Now, we've got a core group of shareholders that are convinced that we have the goods because they follow every release. They go to the site, they look at it, They look at our flow sheets and everything else, and they're happy with the results to date. So, it's just a matter of time till we start to see another run, and when this time, hopefully, it'll be more sustainable and not a rapid run up and a rapid run down. As much as I like to see the stock go up, the rapid runs are always prone to corrections, and so the more you can just ease the stock up on results, the better off the shareholders are. They don't get whipsawed. The new shareholders coming in are not paying exorbitant prices, and but it's volume that attracts buyers, and so I can't blame them for jumping on the ship. They read what they can. They say these guys have got it, and they buy the stock, only to get caught in a downdraft. And some of the guys that have been caught have been in contact with me, and but they really like the process, and they're going to hold the course, and hopefully they've averaged down a little bit in this last rundown. We've had quite a significant rundown. We seem to be steady here in the $1.15 to $1.20 range. So it may be an excellent entry point. I'm not recommending that that's an entry point, but somewhere along the line, there's got to be a area where the entry point is going to be significant for the shareholder in the long run. And it's an exciting situation that we're in. There's always news. That's why I'm able to do these podcasts. I go through, I was going through 400, 600, now 800 emails. A lot of them can be deleted immediately, but if you don't follow the industry you're in, then you're prone to miss out on a few things. And so I try to follow everything about our company. So that's why I spend, half my weekend going through emails and answering them, or, just putting, saving them for the next podcast. And, I can't say enough about what's happening in Europe. They're building gigafactories all over the place. Certainly you know about our MOU with the one in Italy, and that one will, these new gigafactories are looking at building a recycling facility on site as part of the plant. And so, we've been looking into that. We've been contacted by other European gigafactory proponents, and and thanks to our new advisor, Johan, that these meetings have taken place, and so we're in excellent shape, Jim. We're in excellent shape financially. We're moving along on the 2.7 million. And, hopefully our timeline to complete everything in that is 18 months, and within 6 months to a year, we had hoped to have a commercial plant. So, it's the timing's perfect. I mean, it couldn't be more perfect. I mean, these gigafactories are being announced almost daily. You're talking about hundreds of billions of dollars that are going into gigafactories. And you read very little about the money that's going into recycling. Well, we've spent money as a small company. We've spent all our money on advancing those projects, and luckily, we're also involved with the Defense Logistics Agency on the Wendon stockpile. Stockpile, of course, is there for when if anything happens, it closes the borders or anything like that, they have at least a stockpile to process the manganese through, and that would be a stepping stone for us to go after the one area that we have down in the Tillery Peak range that is a little, the drilling there has been a little higher than the average drilling. And it would require a little more drilling, not that great of expense, maybe $1 million to $2 million to get a resource there. So we got a lot of things on our plate. We were looking at a spin out, but to be very honest with you, I expect that we'll be announcing that we're going to not go through with the spin out. It's not a incentive. There's no incentive there to do it. It's all it does is increase the overhead around here, and and I don't think you'll get as big a bang out of the shares you would receive in the spin out as compared to the shares that you already have in American Manganese, because we're going after a big target there, and if it hits, it could have a significant effect alongside of the recycling process and the manganese process and everything else. I mean, how big a spread do you want in a small company? I mean, we're trading at $1.23 today, and it's a small company with 3 excellent projects. So, people should also look at that aside from the recycling. Recycling is the biggest advantage out there, and I love it. So, that's kind of where we're at, Jim.
Now, Larry, we have a new segment on our podcast called Ask Larry, and today you have a question about insider selling.
Yes, and unfortunately I've already gone through that, and that was basically emails that I was getting, gleaned from the CEO and the bull boards, and when I look at the insider selling in American Manganese, it's a lot less than most of these companies that do nothing. So, I've explained that, and I think it's a non-event. Sure, it looks bad for an insider to sell some shares, especially at the progress that we are. But there's various reasons for selling shares, and I have already gone over some of those. And I won't be apologizing for myself because, like I say, I'm close to a net buyer of 1 million shares, which makes me happy. And, because I had to sell 1 million shares at 2 cents. Nobody said anything about that when I had to pay our listing fees back in 2015. So it's it's something that I don't feel I should have to defend, but I think I should explain.
Larry, for people new to American Manganese, what is the company all about? Where are you traded, and how can they get more information about the company?
American Manganese is a company that developed resources in the Artillery Peak Range through the expenditure of tens of millions of dollars. We developed a resource. We brought in a solution to actually save water. And that's one thing I never mentioned is that, we have a system of processing the manganese ore, and you know that Arizona's a desert, so water is hard to come by, where we reuse the water, and we make a dry tailings at the end of the day that can be backfilled. So we've been thinking environmentally for quite some time. The company's, this is not its first rodeo on environmental aspects. And certainly our process with recycling is another example of what we can do. And that recycling process came off of the cornerstone of that was our manganese patent. We hold approximately 5 or 6 patents now in 4 or 5 different countries, and we've got applications in for 6 more. So that's the nutshell of what the company's all about. You can find anything you want because we're very transparent, and every step we've made we've announced, and it's on our website at www.americanmanganese.com, or you can phone the office here at 778-574-4444, or email me at LREAUGH@AMYMN.com. We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the QB under the symbol AMYZF. And we're traded in Frankfurt under the symbol 2AM.
Larry, thank you so much for the update.
You're very welcome, Jim.
I've been speaking with Larry Ray, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on April 23rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.